Lennar Corporation is cutting prices in a cooling U.S. housing market. Federal Reserve Governor Michelle Baumann supports a 75 basis point rate hike in July. Housing markets labeled high risk of a home price drop just spiked 73%. JP Morgan is slashing workforce as housing market cools. Hello, ladies and gentlemen. I hope you're all doing well. Welcome to the channel. Today we're going to cover breaking news from Bloomberg, Yahoo Finance, Fortune, and much more. There's so much information to unpack here. Thank you so much for tuning in. One caveat, I'm a Florida, Georgia real estate broker, not a financial advisor. All right, let's begin. Lennar cutting prices and cooling U.S. housing market. Lennar Corp has started trimming prices and offering buyer incentives in some areas of the U.S. to bolster sales in the cooling housing market. Rapidly rising mortgage rates and economic headwinds have depressed new orders and buyer traffic in June and increased deal cancellations, the builder said on a call with analysts Tuesday. For now, Lennar is sticking to its earliest forecast for deliveries of about 68,000 homes in its full fiscal year. The catch is that, with demand now starting to wane after the pandemic boom, current attempts at guidance are now tantamount to guessing and not guiding, Executive Chairman Stuart Miller said in the company's earnings statement. He warned about the slowdown already underway, calling it a complicated moment in the market. As the Fed tightens financial conditions with restrictive monetary policy, it is expected to move demand downward. At the Senate Banking Committee hearing, Powell stated fewer people were visiting homes, wait times were increasing, sales were down, and housing starts were slowing. Interest-sensitive spending is moving down due to the Fed raising the federal funds rate and shrinking their balance sheet, consequently softening demand growth to reach their 2% target rate. Fed's Bowman backs raising rates 75 basis points in July, says half-point hike should follow for a few meetings. Board member says top responsibility is reducing inflation. Federal Reserve Governor Michelle Baumann said she supports rising interest rates by 75 basis points again in July, and following that with a few more half-point hikes. The hawkish remarks Thursday come roughly a week after the central bank delivered the largest rate increase since 1994. Fed officials are sending a strong signal that they will do what is needed to rein in soaring inflation, while acknowledging that it has become more of a challenge for them to achieve a soft landing on the economy. Okay, so it's looking more likely that the Federal Reserve will opt for a 75 basis point rate hike in July. In the beginning of the week, Federal Reserve Board Governor Christopher Waller said he supported a 75 basis point rate hike in the July meeting. There has been recent conversation in the media for a possible 100 basis point hike, while Jay Powell declines to rule it out. This means we could see 7% mortgage rates by the end of July. JP Morgan's mortgage business slashing workforce as housing market cools. JP Morgan Chase is slashing jobs in its home lending division as rising mortgage rates and inflation drives a slowdown in the housing market. The bank is expected to lay off or resign more than 1,000 employees, Bloomberg News first reported on Wednesday. Bloomberg's report indicated about half of these impacted workers will be moved to different departments within the bank. And it goes on to say, our staffing decision this week was the result of cyclical changes in the mortgage market, a JP Morgan spokesperson told Yahoo Finance without specifying the magnitude of the decision. We were able to proactively move many impacted employees to new roles within the firm and are working to help the remaining affected employees find new employment within Chase and externally. Earlier this month, the bank's chief executive officer, Jamie Dimon, warned of a hurricane bearing down on the U.S. economy, citing the impact of higher interest rates. You better brace yourself, Dimon told an audience of analysts and investors. JP Morgan is bracing ourselves, and we're going to be very conservative with our balance sheet. At the same event, Wells Fargo CEO Charles Scharf echoed a similar sentiment, suggesting a downturn in the housing market could impact the bank's staffing levels. With its recent move, JP Morgan joins a growing list of real estate companies downsizing their workforces to cut costs as higher borrowing rates and surging prices weigh on demand. Online real estate platform Redfin announced it would let go of 8% of its workforce, with CEO Glenn Kelman citing the slowdown in home sales and a sharp rise in mortgage rates. Real estate peer Compass also said it was downsizing its workforce as companies grapple with the cooling market from last year's pandemic-driven rise in home sales. The Fed's stated determination to curtail inflation through interest rate increases and quantitative tightening have begun to have the desired effect of slowing sales in some markets and stalling price increases across the country, Lennar Executive Chairman Stuart Miller said. And he goes on to say, the weight of a rapid doubling of interest rates over 6 months, together with accelerated price appreciation, began to drive buyers in many markets to pause and reconsider. Okay, so rising mortgage rates have been detrimental to the mortgage market. As the Fed shrinks its balance sheet with quantitative tightening and raises the federal funds rate, you can expect a shock in the mortgage market. As I mentioned last week, MBS mortgage-backed securities went no bid for 1 hour after an 8.6% CPI reading. The last time this happened was in 2008. Housing markets labeled high risk of a home price drop just spiked 73%. The U.S. housing market is slowing fast. A combination of record appreciation in home prices, which jumped 37% over the past 2 years, and spiking mortgage rates up from 3.2% to 5.88% over the past 6 months, has brought the pandemic housing boom to an end. We're staring down the sharpest decline in housing activity since 2006. The probability of a price decline has intensified in recent months as mortgage rates continue to surge and consumer confidence is shattered by high inflation and fears of recession. The number of markets with more than 50% probability of price decline has nearly doubled, Selma Hepp, deputy chief economist at CoreLogic, tells Fortune. And it goes on to say, historically speaking, the pandemic housing boom has pushed the U.S. housing market to its affordability limits. Two separate analyses, one conducted by Moody's Analytics and the other by economists at Florida Atlantic University, find that the vast majority of U.S. regional housing markets are now overvalued. Okay, so we will continue to see shocks in the housing market until the Fed effectively tames inflation, and with that, they risk breaking the housing and mortgage market. What do you think of all this? Let us know in the comments. Okay, so today's takeaway. Lennar Corp has started trimming prices and offering buyer incentives in some areas of the U.S. to bolster sales in a cooling housing market. The U.S. housing market is slowing and the odds of home price declines jumped by 73% in some markets. Federal Reserve Governor Michelle Baumann backs rising rates of 75 basis points in July, making the chance for a 75 basis point rate hike more likely. J.P. Morgan is slashing jobs in its home lending division as rising mortgage rates and inflation drive a slowdown in the housing market. If you like this video, please consider subscribing to the channel and hit that like button. I'm a Florida, Georgia real estate broker, not a financial advisor. Thanks again, and we'll see you in the next video.